and we'll predominantly look at the charts. But before that, the one important thing that we should know is that Indian markets, to a very large extent, is correlated with global markets. So we have a strong correlation with global markets. So this should not be forgotten. Now, why I'm saying this is that if US markets is going to fall, I don't think we will hold. So that's very important. So there's a good correlation with global markets. So what is the present negative factor for global markets? There's a rising yield. So rising yield globally, higher inflation, the rising yield is now considered to be negative as far as the equity markets is concerned. Of course, there is a pandemic situation, but that I think probably is got a less of an effect right now. The bigger effect is the rising yield, which is considered to be negative as far as the market is concerned. So we should be quite careful, and we should know to put stop losses properly this time. So rising yield is considered to be one of the most important negative. So this is the present situation in global markets. So we see most of the US markets, the indices, whether it's US S&P 500 or NASDAQ, I think they are in a slightly uncertain thing. So there's a lot of zigzag movement as far as US stocks are concerned. So that is getting reflected in Indian market. But Indian market generally, as know, after the tumble which took place till December middle, the last 1 month we have rallied very beautifully, very smoothly. We have rallied from 16,400, 500 levels to 18,300 levels. So we have had almost a 2,000 points rally, almost more than 12% rally. So we have almost caught up with the high peak of the November period. So we should be looking at this market positively. The reason is the positive sense is coming from budget. So we do not know what the budget is going to have, but budget, if it is acceptable to the market, we should see at least a rally coming back after the budget. So it will all depend now. From now onwards, the market movement will be directed by the budget. So there can be some choppy up and down movements, and only after February 1st, when the budget is presented, so we will have some clarity. But the dominating effect after budget also will continue to be the rising yields. Now, even in India, we have seen the 10-year GSEC, 10-year government of security, 10-year GSEC prices, as the GSEC yield has now gone to 6.65%. So this has shot up from below 6 to 6.65% in the last couple of months. And this is also because Indian interest rates are also likely to move up probably after a couple of months. So these are considered to be some sort of, would say that you can put a brake on a runaway global situation, global market. Then another important thing, the corporate earnings. Now we have seen corporate earnings coming for the last quarter, and so whichever stock has been having very good, very well, great rally based on the expectation of further and further better results. If there is a disappointment, there is a bigger fall, and we have seen companies like HCL Tech, Mahindra, Tech Mahindra. These all are Mindtree, I think. So these are all under pressure, because they have not delivered as expected by the market. But whereas we have seen TCS Infy still at its highs, of its recent highs. So I think the market continues to reward those who are meeting the expectation, though there is some disappointment, because HCL Tech ranks amongst all top IT stocks. HCL Tech has a lot of positives, so normally it should be in a rally mode. But considering some disappointment or not meeting the expectation of the market because of pressure on margins, HCL Tech performance was not considered great. So there has been a fall as far as some of these tech stock also is concerned. There is a mixed bag even in tech stocks. Now, the other important thing is that HDFC Bank has done well. So in the banking sector, HDFC Bank has come out, is now accepted there. So HDFC Bank, and there is a good amount of course, SBI result and all will come only next month. But generally, SBI and all is improving its performances, its NPAs and asset quality is definitely improving. So SBI is being talked about as likely to give a 30% rally from here within a year or so. So HDFC Bank, SBI, ICICI. So these banking stocks were also doing very well till morning. Suddenly there was a big fall. So the fall was almost 700 points in Bank Nifty, from 38,000 and odd levels of 38,700, 800, fell down to 38,150. So today trading has become a very difficult thing, because most of them are now, I think, computer programmed. So either you go for investment or you go for algo trading. So it has now become like this. There is no way of doing a middle path. Either you go for investment, wait patiently, take your results of 15, 18, 20%. So buy on dips or do some SIP. So doing investment, or you do it in algo trading. So today it has become like this. You cannot just go out and come back and see whether you can do something, because today itself Nifty at around 210, 215 was something like 18,300. Then it just fell very closer to 18,100, 200 points intraday, top to bottom, and all happening within an hour. So these are the, and Bank Nifty from 38,800 levels, 38,100 also. So the fall was 600, 700 points. Very steep fall was happening in Bank Nifty also. So these things now has become a common feature of up and down movements, and very fast up and down movements is taking place. So we need to be very careful about our trading aspects. But right now we are, when we speak about the macro things, then some of these stocks will continue to look good, and tech stock has become mixed. So we have to wait and see as far as the Reliance, L&T type, the type of results, the announcements that are going to come. So these things also will guide the market on the on either way. But the predominant macro features that we have seen are the budget aspects, then the rising US yield, and then we come to the corporate earnings. And corporate earnings is coming out with some mixed bag till now. That like Infi, TCS have done have delivered as per the expectation, and even they bet the expectation. HDFC Bank has also bet the expectation. But there are other stocks which are good, still delivered, but not in a position to meet expectation, like Wipro, HL Tech. So these are some disappointment is there. Then when we come to the auto sector, because there are certain developments which in auto sector, like EV, then probably further and further safety regulations which will add to the cost. So today we saw some downgrade of Maruti by CLSA, and there immediately the stock fell and dragging the auto sector down, which was doing very well. Suddenly it started to fall. So there are very swift movements that are taking place in stocks and also in sectors. So auto sector was one which was affected by some sort of a downgrade today. And then we have, of course, the commodity stocks. Steel stock is okay, is reasonably Tata Steel has tried to bounce back now. So we have to look at each stock and each sector individually to calibrate regarding what position we should take in the market. So if you look at the big picture for trading, it is much easier than doing for intraday, because intraday, if you want to do excuse me, it has to be more of a we have to look more towards the algo trading. So mostly algo trading is what is now replacing the intraday trading, buy and sell. But as far as the investment is concerned, or trading with a slightly bigger horizon, I think you can use our charts. So we will now look at the charts. This is the Nifty chart, and Nifty chart is today, see, if you look at it, it was struggling around this 18,300 mark for the last couple of days. For 3-4 days, it was just going up, and then coming down. So there was up and down movement from 18,150 to 18,300. So it was getting locked in that 150 rupees. And then after that, today, finally it gave way with a big fall. And this is the candlestick pattern. This is a very bearish engulfing pattern, they call. So we have a big black body now engulfing the previous white body, so which means this is considered to be a very important top. That is 18,350 is going to be a slightly important tops. So the fall normally we see 550 to 600 points should be the normal fall, a normal correction. That's around 2.5-3%. And that should take it right up to 17,600, and 17,600 to 500 is a very important mark, because for many price actions have taken place around that. if you look at the first, it hesitated after a fall towards 17,600. Then after it fell, then it rallied, and then it was again resisted at 17,600. And also clustered moving average supports are coming closer to 17,550, 17,600 levels. If you see, except for the 200-day moving average, 20, 50, 100, most of the moving averages are still coming closer to 17,500 and 600. So the bullish expectation continues to hold on a bigger time frame at 17,550 to 17,600 levels. So only if it starts falling below that, I think probably we can have a bigger fall, which could probably target back the previous low levels or somewhere very close to that level. Excuse me. Probably coming back to this level, which is 17,155 to 17,200. So that is a little far off because it's still 1,000 points away. So I think probably we will keep that discussion for a later part. So 17,500 levels in Nifty is what probably we will look at it. So this is from the big time factor, this one. But in a monthly chart, if you look at it, it is still good because it has broken the previous month. This is the December high low high, which has been broken in January. So I think we should hope that this particular thing is going to be a very important low, and it is going to be a 5 months low now. If this month doesn't go below 16,410, so that should be a very, very important low. And considering that budget is coming, we could expect the budget rally or post budget rally, which could probably still take it higher, keeping 16,400 as a very important support. So all these things will also depend on what's going to happen with respect to equity markets in US and globally, because globally the major factor, as I told you, is the rising yield, the impact of inflation. So those things are going to have a very important effect on the global markets. So now coming back, we look at the other indices which are very important for us, the banking index. Then of course we will look at some of the other important stocks which are there, and probably get an overall overview of where we should invest. So now we will look at the Bank Nifty, which also is still constructive from a monthly point of view. See, from a monthly range, last month high has been broken, so this has to hold. So hopefully this will hold. So we will look at the shorter time period, which is the daily chart. Now in the daily chart, there is a lot of hesitation. It is not willing to, the last 4 or 5 days, if you see, it has not gone back above this particular high, which is 38,850. So if this low is broken, which is the 38,445, then probably it could go to one of these important moving averages coming clustered towards the 36,850 level. So there is a possibility that there can be a drop towards this, and this particular high can be a very important place. That is 37,000 or around 37,000. So around 37,000. And then probably 36,750, 800. So 36,750 to 37,000 can be a very important support. So for Bank Nifty, and Bank Nifty has a possibility to now go down by another 1,000 to 1,500 points. So Bank Nifty, we need to be careful. So any further fall below today's low, I think we particularly it has fallen below yesterday's low of 38,435. So good chance that probably we could see some more action on the downside before it stabilizes and starts moving up. So we will wait for Bank Nifty investment is concerned, and we will wait for it to fall closer to one of these clustered moving averages, coming closer to the 37,000 mark. And a further fall below that can take it down up to 35,950 levels, where the 200-day moving average is coming. So right now, Bank Nifty also probably can correct itself a little lower, and right now it's better to avoid the longs, and also if you have any longs already, then it is time for you to pull your stop losses very closer to this level, which is 38,000. This low is 38,000, not 007. That is 38,000. So it's very important that you put in a stop loss below 38,000. So that you can buy again the Bank Nifty another 1,500 points lower, under 3%, 4% lower, you can shop Bank Nifty. So Bank Nifty also looking a little on the downside, But the bigger picture is definitely no still good, because no, the weekly chart is still good. It's quite constructive, and we could see probably some dip before the rally takes place. So Bank Nifty will keep a watch on Bank Nifty. Monthly chart and weekly charts are constructive. Pullback is possible, but again it can go up after the pullback. So we'll wait for the Bank Nifty to come down a little lower before we look at it. So we will look at the IT chart, Nifty IT. Nifty IT chart weekly, I think it is stagnating. If you see, last 3-4 weeks it is stagnating. So possibility of a pullback is there. But I think the pullback, normally the corrections in Nifty IT is quite shallow, and it gets supported in the 20-week moving average itself. So I think probably it is now at 38,091. So it can go down to 36,315, which is another 4 to 5%. So I think probably the correction in Nifty IT could also be around 4 to 5% in Nifty IT. So most of the indices are possibly poised for a 5% correction, but Nifty may not correct to that 5%. Nifty may correct by 2.5 to 3%. We will look at some individual stocks, and we will start with some of the stocks which normally are looked for investment and as well as trading. And one of the stock is ICICI. So ICICI, they look at the daily chart. So ICICI, again, the price actions in the last 3-4 days is not good. So I think probably it's time for us to pull our stops towards for investment, wait for it to correct. But it will not go below, mostly it will not go below this level, which is 698. So the low of 698 will hold for ICICI. Fundamentally it is being put at around 950 to 1000 possibility. So I think any correction of ICICI towards the lower levels, probably it could come to this level. So this probably is a place. It could come down to 760, 765 from 823, which is around 7 to 8% correction possible. So I think from that level, from 750, 60 levels, it is poised for a move above 900 at some stage. So ICICI on a fundamental basis is a good stock to be bought for a decent rally of this year. And we are definitely hoping that this of 698, unless there is some major issues, 698 should not give way unless there is some budget is not liked by the market or some big global problem. I think 698 should not be broken. So any correction which comes should hold around 750 to 760 as far as ICICI is concerned, and the move should get back above the 900 mark. Now, the recent results which has been accepted by the market, HDFC Bank. Now HDFC Bank on a daily chart may not look great at this point compared to even ICICI, but I think the climb which is now taken place, now this particular action, this price action gives the feeling that probably this low will not be broken. So this low, which is the 1414 low, I think last time when we saw this low was not broken. So similarly, this low will not be broken. So now even the correction has not been able to take off this. So we should be looking towards buying ICICI on dips, and the dips can probably take it even up to 1456 or 146. Sorry, HDFC Bank. The dip can take it place right up to 1455, 1460 also. But it may not break this low. So what we are trying to is to give you a confidence regarding which level will not be broken. So either you go for a trading of a slightly longer horizon, because any investment, any stock investment should be considered both from investment point of view and trading point of view. Now, from the slightly longer horizon trading point of view, I think the ICICI or HDFC Bank on dips can be bought, giving 1414 as a stop loss. Now, if you're going for a shorter time frame, as I told you, it has become very, very difficult for individuals to trade because of the huge intraday movement. Now, we will just look at the Nifty itself today, what happened in 15 minutes and 5 minutes. And that is the reason I am talking about slightly bigger time frame. If this is possible for you, you would do. But see, in 15 minutes time, today, this is the time which is 2:45, right? So now I'll put it Indian time. So this was at 1:15. At 1:15, it was 18,318, and by 3:15, it was down 200 points, 18,089. So more than 200 points, 18,118 is 200 points. More than 200 points was lost within 2 hours. And that too, if you see from 8, if you look at this swing that took place, today in 5 minutes chart, if you look at it, see today 11:30, see today morning, see, morning what happened, 9:15, it started at 18,350. From 18,350, it fell drastically down to 18,186. Okay. So almost 170 points. Okay, 170 points were lost in 1 hour time. In 1 hour time, we have seen almost, this was 5 minutes chart. So in 1 hour chart, 170 points was gone. And from the same, from 10:20 to 1:15, in the next 3 hours, it just rose from 18,186 to 18,318. So approximately 130, 140 points. Then from 18,318 it fell. So look at the swings, 200, 170, 370, another 200. So 570, 550 to 570 points falling within the day, up and down movement. In this particular case, unless you have the ability to use some sort of a system which automatically executes the trade, how is this possible for an individual trader to do that? There will be a panic because you do not know whether you should go for a buy or whether you should go for a sell. So for an individual trader, it will be very difficult for us to even think about buying or selling because of the steep up and down movement that is taking place. Now look at the bank Nifty today. What happened? Look at bank Nifty. See, today morning at 9:15, it was 38,350. 500 points upward movement, right? 500 points upward movement. From 38,800, it just fell within 2-3 hours to 38,100. So 750 points fall, 500 points rise, and 750 points fall. So the rise and fall, if you look at it, it is 1,250 points of up and down movement. In this particular case, how do you look towards doing by seeing the screen and doing it? By the time you think about something, the fall would have taken place, your profits would have evaporated. So many other things could have been could have happened very easily. So that's the reason why we are looking at something, probably a slightly, for those who are not in a position to use any system for execution, then you should consider like what we have been just explaining to you, like how whether you should buy HDFC Bank, ICICI, SBI and all, and what are the stop losses that we should put. Now we have been now just a few minutes back we were explaining some of the stocks that we saw about TCS. We saw let us say TCS, HDFC Bank, ICICI, all the stocks that we just saw. So now let's look at the daily chart as far as TCS is concerned. Now TCS has rallied significantly, so there is a chance that it can cool. But considering the way TCS performance is only daily chart, compared to even the IT stock, IT sector, and also compared to so many other performance, other stocks, it is still good. It is still looking good. So that means TCS is inherently more stronger than, no, we can say Nifty, or because if you see TCS has claimed back the previous high which was made in October. No, October high has been now scaled. Okay, whereas Nifty has not scaled. Okay, so relatively TCS is having a higher, no, solid performance. Okay, so that means if you want to rank which stocks you have to buy at TCS on dips. So that will be a much better way of looking. Now it's already heated, so we need to be careful about it. Now let's look at Reliance. See, Reliance, the October high compared to this, definitely this is far low. So if you want to choose between TCS and Reliance, you can definitely now look at TCS, because the performance speaks a little, no, as far as the price action is concerned, the last couple of months, which shows that TCS is definitely a better stock now to be bought on dips. Okay, so Reliance also, I think, no, we should know that probably it may not go below this low, so we have to have a complete. So we must first fix that what is the likely price which will not be penetrated in normal times. So if it is an abnormal time, nothing can be done. But if it's a normal time, then this low should not be broken, which is the this last low which came. This is the 23 daily chart. So 2240 also. So 2240, we hope that 2240 will not be broken in normal times, which means it is a buy on dips. So any fall from here and it comes closer to these levels, which is the highest 2391, so 2390, 2380, we can go for buying Reliance, because we do not know whether at some stage that it can be an outperformer compared to TCS. So you want to diversify your trading call by having some 8 to 10 stocks. Reliance is definitely one. Only question is, where do you pick up? Okay, what is the weightage you are going to give between TCS and Reliance? So these things, because you are becoming like a mini fund manager by doing some your own stock ideas. So for doing that, when you look at the charts compared to the index, TCS is doing well. So TCS should be bought on dips. So compared to Reliance, you can give a more heavier weightage to TCS. TCS also, Reliance also should be one stock which should be had. So which are the other stocks which are looking well? Whether we go for Infi, L&T, Infosys. So Infosys is doing extremely well, and like TCS, Infosys also scaled all its previous peaks. So the results have been accepted. The last couple of days results which came have been accepted. So we should see some sort of a consolidation as far as Infosys is concerned, and so we should definitely, be hoping that this particular low itself may not be broken. This low itself, 1800 low itself, may not be broken that easily. So 1800 low we can take as a very important low, based on which no, probably we can factor our trading call. So any dip in Infosys is another stock which can be bought along with TCS. So in the tech space, I think Infosys and TCS are outperforming. Of course, we have not seen mid-cap stocks, which could be like Persistent Systems. Persistent Systems again is one stock, probably, after a very huge rally, it is now having some fall. It is now having some fall, no doubt about it. So there can be a little more greater, a slightly bigger fall, but I think this low may hold. So it is also a buy on dips, and but comparatively, of course, this has outperformed index and all very significantly in the last couple of months. May require some cooling. So just wait and see. Based on the charts, you can go for it, because there can be some steeper fall. So which can put you on. Persistent Systems, you can just keep on the monitor. You don't need to buy immediately, but you can see how the price action is and then go for a buy. Apollo Hospital is one stock which has done very well in the last couple of years itself. And so let's look at whether there is a correction, and that correction is now whether we can get into that. See, now we see slightly bigger correction that is taking place here. But even if this correction is too old, then I don't think so this is going to go much below this low. So this is the low from where it has risen, right? So this low is going to be very important. So we don't see no the very significant this one below this, right? So that means it is definitely going to be a buy on correction. And only thing is we need to know that there's going to be a buy and correction. So wait for some price action which will give you why you should go for at what level you should go for a buy and dips. Now we can very clearly say that probably probably one of these levels, these levels, so all these levels of like 43.50 or so. So those things, because already it has corrected from something like the high was seen as around 5,700, 750 levels. If on a close basis itself, 5,733 has been seen. So 5,733, if there is going to be a 25% correction, assuming, which is a big correction, it should hold around 4,300. So it should go, it should hold above 4,300. Now we have got around 4,500 to 4,600. So under 200 rupees, I think definitely it's a buy. It's a buy. Maybe for another under 200 rupees, and we have seen the previous corrections also. Any big corrections, as not in the last couple of this is a huge rally. So I think it's a very difficult to even go for any comparison. But normally we expect that it can hold above some 20, because last correction, if you see, this was 5.2 approximately, and it came down to 3955, or so approximately 1,200 points, and that means it was a 20% correction. It was a 20% correction. So we should expect that this correction could probably stop Apollo Hospitals closer to 4,300, which is a 25% correction from its peak. So just keep an eye around this 4,500, 4,600. But there is a risk because it has rallied so significantly, and promoters holding is only 25% or so in Apollo Hospital. So institution holders, if there is some issue, then probably the stock can get sold heavily. So that's the risk. That is why we said if you are going for investment, it is better to go for mutual fund. But if you are doing some stock picking, we are giving some ideas. That's all. So now the Apollo Hospital is one which can be looked at. The other performance, the last two important things we need to see: Tata Motors, which has been doing well as far as the auto sector is concerned. Tata Motors probably now outscores other auto stocks, and that can be seen from the price action also. So this is the it is heading towards its previous multi-year high, which was assured in 2015-16 level. So it is getting back closer to that place. So let's look at the daily chart. So daily chart, probably it is now very closer to its previous peaks, which attained in October, November. So that means it is outperforming the index. It is outperforming the index. So which means this stock is something which can be bought on dips, because the outperformance can still continue. So, but only thing is, now there seems to be some tiredness in its movement. Now, if you look at it, there seems to be some divergence coming in the MACD. This was a very clear thing, and so this movement which is happening right now, there seems to be some sort of tiredness in TCS. So we have to be very careful. Don't buy immediately at this level. So let us see how it comes down because of the divergence that we see in the MACD chart. Now prices are climbing back to its previous peak, but the indicator is not showing any robust strength. So probably it could put it for some pullback in Tata Motors. So we need to wait for Tata Motors to pull back before we go on the long side. So let's look at steel sector, Tata Steel. So Tata Steel it just came below the 200-day moving average, and seems to have taken some support closer to the 200-day moving average. 1 or 2 days, 1 day low was there only before at around 200-day moving average. So Tata Steel now has started to climb, and it has gone above the 20-day and 50-day moving average. So it has started to climb, and it held on to this price action. So it didn't fall below this low. So that is one comfort. and now the MACD has also started going above the zero level after having come down significantly. So that means any further rally from here, any further climb above this price, which is the 1245 mark, means that Tata Steel can be on fire again. So please keep in mind about Tata Steel. And if you are probably looking towards buying, taking risk and keeping 1065 as a stop loss, 1060 as a stop loss on a close basis, then any dip can be bought keeping 1060 as a stop loss. So, but if it's going to fall below 1060, it is better not to remain in that stock. So keeping 1060 as a very important level, we should go for a buy, and that's also marks something because it is, so this high is 1519, and this closes 1071. So that means 1519 minus 1071 has come closer to 30%. So 30% fall has already taken place from its peak in Tata Steel. Normally such corrections can happen in Tata Steel, even bigger correction can happen depending on the developments in commodity markets. But the present outlook, because of the spiking inflation, supply side problems, and economic activity likely to pick up along with inflation, if that be the case, then I think Tata Steel has still got a good chance to go up, keeping this particular low as a stop loss, since it has already corrected by 28-29%. So this is a very important point that we need to look at it. So Tata Steel, we should be, because let's look at the previously also whenever of course whenever it starts to fall much below 200-day moving average, we need to be very careful till such time it plunges, it's able to lift itself above the 200-day moving average. So this low, which is below the 200-day moving average, is a very significant thing. So 1065 is something you have to monitor. Keep that as a very important stop loss and buy on dips as far as Tata Steel is concerned. So now we have seen Tata Motors, we have seen Tata Steel. So let's look at the consumption stock, which is Titan. Titan in Titan Industries. So Titan is a clear outperformance in the sense because it has already scaled back the October high compared to the index, right? So that means Titan is like TCS, probably is a stock which can be bought more in dips, even when compared to the index. So so this is definitely a buy on dips. Titan is a buy on dips is concerned because of the outperforming category of Titan compared to the index. So if you want to pick up some stock which are doing better than the index right now, Titan also comes one, along with TCS, along with Infosys. This stock also is in a we should be looking at it. So generally Tata companies, whether it's Tata Motors, whether we have looked at Titan, so some of the consumption stocks of Tata basket have done very well in the recent period. So those things have to be kept in mind while we look at it. So while we look at buying individual stocks. So L&T. L&T is a clear outperformer because ever since the low that came, and even if you look at it, the last December low, this was 1735, and from 1735 it has gone to 2071. So 300 points, and in 300 points we have got divided by 1735. So it has gone up by 17%. Whereas the index itself from 1600 points divided by 16,600 or so, it is only 9.7%. So L&T has definitely outpaced the index as far as the rally is concerned from the last low, which means that L&T is going to be an outperformer. So that gives a very strong feeling about L&T. And even when let us look at the December to December figure also. Last December 2000, 20, it was 1267, and this time it was 1895, right? So 1895 minus 1267 divided by 1267. So it has done 50%. L&T see has outpaced index almost two times. Index did only 23-24%, right, on a year-to-year basis. Now this is 49%. L&T is a fabulous. So L&T is one stock which has done very well recently in recent periods. So L&T is definitely a buy on dips. Probably it can come up to 1895 or 1900, and this low will be very important. So L&T is one stock which normally never performs that great, but this time it has outperformed. So L&T is another stock which you should keep in mind. So what are the top stocks when we are looking at it for trading as well as from the investment point of view? L&T, okay, TCS, Infosys. So Reliance always has to be there, okay. Then ICICI, HDFC Bank may start picking up, okay. Auto sign, wait for a fall in Tata Motors, okay. Titan, okay. So these are some of those stocks which probably you can look towards on the buy side. Then SBI. So if you want two stocks to be picked up, probably SBI and HDI, SBI and ICICI here. Reliance. You can look at TCS, Infosys, L&T. You can look at Tata Motors. Look at Titan. So these are, of course, in auto sector, Tata Motors is there. Steel sector, commodities is there. Tata Steel we have not mentioned, but you need to be careful if you want to see the chart and do it. Okay, Tata Steel. Then bank, SBI, I say then diversification, L&T, Reliance is there, L&T, then tech side, TCS, Infosys is there. On the consumption side, Titan is there. So these are some of the stock ideas that we looked at it, and we also looked at the index and bank index and what are the important levels. Probably Nifty has a chance to slide up to 17,600 or so. From there it may start picking up, and the factors that will keep impacting the indices will be the rising yields and India budget. Okay, so these two are important issues in the next couple of weeks, months to follow. And then of course the corporate earning results season has come. Depending on which stocks are beating the index, I think those things will continue to do well. We have also looked at some stocks which are outperforming the index, so those are the stocks where probably we can consider for investment. And we also mentioned very clearly that if you either you choose the mutual fund for investment or you choose these type of stocks which are there, so probably they are little more safer. One or two riskier stocks like Apollo Hospital, Persistent Systems we have mentioned, where probably you can look at the chart and decide about to buy. As far as the trading of a very shorter horizon is concerned, we have already mentioned that you need to be very careful, because today's the last couple of months and year itself, volatility is so huge that it is very difficult for you to sit in before even the screen, punch your orders and take it. It is moving like that. We just illustrated the intraday movement today, so we need to be careful about it. So in that case, probably you have to look at some sort of a systematic programmed trading, which we will keep talking about it in coming weeks and months. So now it's going to be 7:45. So if you have any questions, please ask. Thank you. So we must practice the art of looking at the chart, listening to some important views. Don't get colored, but just listen, and also look at read some important brokerage house recommendations, why they are saying all those things, and look at the price chart in tandem with that, so you will get an idea. Okay, so the trading is picking all stocks is an art along with ability to analyze. Okay, so thanks very much, and see you again on Friday with a discussion on commodities. Thank you very much. Okay, thank you very much. Stay safe.